Well, good evening, everyone. Michael Soothing here. Thought this evening we would discuss investments. Now, I'm going to tell you where I invest my retirement savings 401k. It's self-directed, but I'm not giving investment advice. I am only telling you what I do and why I do it. This was basically a requested video by a few people, including a guy named Ted Dason, one of my subbies. And he wanted to talk about silver investment a little bit and pick my brain, so I'm going to try to explain, since that's where I put about 25% of my investment portfolio. I'll focus kind of heavily on that in this video, a little ways down the road, but I'll give you an overview of what the other investments are that I think are pretty good right now from a risk-reward perspective and why I'm in those sectors. Yes, I have a little bit of Bitcoin. Very little. A percentage of a Bitcoin, a tiny percentage. It represents about 1% of my portfolio, because in the end I think it will become worth less somewhere down the road when governments intervene. But I'm not here to discuss the particulars of Bitcoin. I understand what its pluses are: portability globally, and no middleman, and the biggest network of nodes for crypto, etc., etc. It's just that I think governments will come up with their own crypto eventually and either heavily regulate Bitcoin, since they don't want any alternatives, or outlaw it altogether, in which case it would drop to around zero. But I'm riding the wave like some of you maybe are if you own any. But let's talk about the broad market. I shot this video yesterday and I didn't like how I did it. So I'm going to start over with the first half. The second half I will show you some things on the computer. So if I'm repeating myself, or being redundant or whatever, it's a little disjointed, then give me a pass on that. But I want to reshoot the first half. So let's talk a little bit about the macro picture, the economy, the investment world first of all. Then I'm going to do a look down at my notebook and change the camera angle a little bit, because it'll be easier for me to make my points without having to remember all of them off the top of my head. When it comes to silver, well, let's change the camera angle before we talk about that. By the way, I have this See's butterscotch sucker, so I might be making a few hard candy noises during the making of this video. Maybe that's why I reshot it. I don't know. But anyway, and I have to sip water now and then, as you know. Let me just give you a broad overview of the big picture. Then you'll understand why I'm putting my money where I'm putting it. The broad overview is this: government money printing and debt is spiraling out of control. And because that's the case, I expect inflation to go up a lot, and I expect the value of the dollar to go down a lot. That means there's no safe place to park your money, even if you're retired like I am. If you put it into bonds, which used to be the safe haven investment, U.S. Treasury bonds, you can expect the value of those bonds to decline quite a bit over time. It won't even stay the same, because people are going to lose faith in the dollar and start selling their bonds, which drives the interest rate up and the price and value of the bond down. It's an inverse relationship. If people are selling bonds and driving the price down, it drives interest rates up. Okay, because it takes a higher and higher interest rate to attract someone to that bond. Now, the current rate of return on bonds is about 0 or less, even though the yield or interest rate has climbed from like 0.75% on the 10-year to about 1.5 or 1.6%. It's almost doubled. That means it's going to cost the federal government a lot more money to service the debt. Imagine if yields went to 4 or 5% on bonds. The value of them would drop precipitously, but also the government would have to spend its entire budget just on interest to service the debt. So we're heading into very scary waters, because you may think, oh, they just passed a $2 trillion stimulus plan, probably be signed into law tomorrow. I'm going to get a check for $1,400. Whoopee. That's going to cost you about $20,000 in the long run, because of a variety of things. Higher taxes, higher interest rates on anything you buy, more regulation, much higher commodity prices, gas. Have you noticed what's happening at the gas pump lately? Just in the last 3 or 4 weeks? Because that's the trend I'm looking at, inflation. Expect beef prices to skyrocket, for example. So because of these trends, I see coming a commodity super cycle, a big increase in commodity prices. Precious metals will be a great place to be over the long run, as will other commodities, copper, etc. So it's partly government money printing and policy and debt that's driving my investment thesis, but it's also government policy in the energy sector. The war on fossil fuels is going to mean big changes there in that sector. It already has meant big changes just in the last couple weeks, which you'll notice at the gas pump immediately, but that trend is going to accelerate as carbon taxes and gas taxes are imposed, and taxes on energy surcharges. The price you pay for electricity will probably double and triple over the next 10 years or so as part of the policy shifts that take place into renewables. What does that mean for an investor? It means the entire energy complex is a good place to put some of your capital, most likely, but including oil and gas, because they're going to get a lot more expensive, but also targeting things like solar panel production and the things that go into solar panels, like silver. A lot of silver paste is used in making solar panels. It's consuming maybe a couple 100 million ounces a year, but that number will climb substantially in the years ahead. And that's just one demand, industrial demand on silver. So I'm invested in things like solar energy panels production, silver, copper, as we build out a grid for electric vehicles, which by, say, a decade from now, most vehicles will be electric. It's going to take an enormous amount of nickel, copper, and silver, for example, to put that infrastructure in place. Battery metals like nickel, because you need storage for a lot of that stuff. And even other renewables like wind power, they will build windmills in the future with giant battery packs so that you don't have a problem like what Texas just had, where they have some wind power production that didn't work because they all froze and couldn't produce power for a few days. Well, if you had a lot of storage, battery storage, for that power, then you could get some of it, even if the windmill is stopped and not producing. Like at night, usually the winds are less, for example. So, you've got all these different sectors that will benefit from some of the future changes. Now, like I said, don't follow my advice and blame me if the market drops in any of these sectors. They're risky and volatile. And so, but I believe in the thesis such that I'm a long-term investor in these things. So I don't get scared out of the market by temporary downdrafts in price. Not unless there's going to be a major change in a company or a policy. People tend to do the exact wrong thing with stocks, with companies. They want to jump in when they see the thing skyrocketing, going up, up, up. It's called FOMO, fear of missing out. So as it's going, accelerating like that, they get in up here because they didn't see it coming and they don't want to miss it. But when the stock goes almost straight up, that's when it will come almost straight down. Like what you'll see with GameStop in the weeks and months ahead, for example. I would short that stock right now if I could, but you can't get a borrow on the shares. Anyway, that's off topic. But people tend to buy high and then they panic and sell their position when it's dropping. Well, if you believe in your investment thesis and nothing's changed with the company or the sector you're investing in, it makes no sense to sell if it's dropping a lot. That's when you want to buy, not sell. When you go to the store, if ground beef is on sale 50% off, is that the time that you buy it? Or would you rather pay 3 times as much, right? No, you buy it when it's on sale. That's what you should do with a good company or stock or sector. Buy them when they're on sale, because if your investment thesis is sound, they're going to go up again in the future. So I'm not worried about gold and silver, for example, where a lot of my money is. I'm not worried if they drop 10 or 20% from here, because I fully believe that in the long run, silver, for example, will be up 100% from here, minimum. That's over a period of, say, 2 to 3 to 4 years, but maybe much sooner than that. Why do I believe silver will go up so much? Well, all this government money printing means people will lose faith in the US dollar. and inflation will take place, and that's when monetary precious metals go up, like gold and silver. So investment demand for silver has basically tripled in the last couple of years, especially lately. And I don't expect that demand to go away, given we're headed to even worse fiscal economic policy in the years ahead when it comes to money printing and inflation, dollar debasement, and debt, government debt. So that's one reason. What are other reasons I like silver? The industrial uses are climbing. Solar panels and electric vehicles and electronic devices of all kinds use a lot of silver, 300 or 400 million ounces a year in those sectors, for example. Jewelry fabrication and places like China and India are increasing their demand on silver, another 200 or 300 million ounces. And on in that vein. I won't give you the entire picture, but you get the idea. Demand is rising. Then if we look at the historical cycles with gold and silver, the ratio of gold to silver in a bull market for the metals has typically peaked around 15 or 16 to 1. In other words, it took 15 ounces of silver to buy 1 ounce of gold. But now that ratio is right around 65 to 1, which is way, way off kilter. It doesn't make any sense from any perspective, including historical. That ratio must drop, and silver price must rise relative to gold. Do you know silver is the only major commodity that is lower in price now than where it was at its last high back in 2011 or even 1980. It's half the price of where it peaked in 1980. No other commodity is like that. It's perhaps the most undervalued commodity there is right now. So that's yet another reason I believe it must rise in the next 2 or 3 or 4 years, and rise quite a bit. Mine supply has been dropping, production supply, and it's getting harder and harder to find the stuff in the ground. The low-hanging fruit has been picked. The big deposits of silver that were up on the surface have been mined out already. And not much new production has come online, not much exploration for the last decade, because the metals were in a falling bear market for about 10 years. Since 2011, and didn't reverse strongly until about a year ago, after the big COVID collapse in the market. Now, everything I say must be couched in one caveat, which is we never know when the market is going to collapse. And when it does, it's going to take gold and silver and commodities and really good investments all down with it for a period of time. But in a scenario like that, the precious metals tend to bounce back the strongest and the quickest. We've seen this before in the year 2000, for example, and 2008, and other times in the past, 1979, etc. So, that's my approach. I have a big allocation in silver, a little bit, about a third of that amount in gold investments, but mainly mining producers. I've got some in solar, some in energy, some in nickel and copper producers, smaller amounts, some in broad commodity funds like corn, soybeans, wheat. But I don't buy all those separately. I'm not a big time investor buying, pork belly futures or whatever. You can buy what's called an ETF and buy all of that just like a stock, all under one little stock symbol. I'm going to show you that. And I think this would be a good time to take a look down at my chicken scratchings in my notebook to explain how you do that if you are unaware. So hold on one moment. I will realign the camera. All right, here we are with a notebook. You know I'm old school, so I don't like to show you computer screen graphics and such, especially in an ASMR video format. If I was running an investment channel, then I would get exotic like that. But instead, we'll just write things here. So, again, if I was going to show you my allocation of investments, it would be something like this. 30% gold and silver. And what would I have that in? Well, I would have some in bullion, like coins. A little bit, not very much. That's something I would keep in my safe deposit box for a rainy day or for someone to inherit, in case the whole system collapses. Having some silver maple leafs or silver eagles, is a good idea. And I've showed you that before when I was showing you my coin collection, but I don't have a huge amount in bullion. A few gold coins, some rolls of silver, and then some junk silver, pre-1964 silver US coins. They're 90% silver, like dimes and mercury dimes and such, US silver coin. So that's where I have, but that's just a little bit. That's probably maybe 2% of my precious metal investment is in actual, what they call physical. So when you hear physical, that's what they mean, physical. But where else do I put it? All right, from there, my subby asked, what do you think about the ETFs? ETF means exchange traded fund. It's like buying a stock on the market, but that fund invests in one specific thing generally. In this case, you can buy a couple of silver ETFs, and they put their investment into silver bullion. Silver bullion. This is going to be such a long video, but maybe it will relax you and put you to sleep. All right, my favorites in this category is one called SLV. Whoops, not SI. SLV. That's the ticker symbol, the stock symbol for that ETF. And they have several 100 million ounces of silver investment. You can buy and sell this instantly like a stock without any big markups, without storage fees and problems, etc., etc. It's called the iShares Silver ETF SLV. So you can day trade it. You could buy it one day, make a 10% profit because silver is so volatile, it goes like this, right? And you could sell it the next day, or a week or a month from now. But here's what I think about the ETFs for silver, the ETF question. SLV is probably not your best choice even though it's the biggest of the ETF silver. I have chosen, I dumped all my SLV, no more SLV, and instead I invest in one called PSLV. It's the Sprott. Sprott's like the biggest precious metals mining investing commodity brokerage in the world, or the most respected anyway. And they have a fund called ETF, called PSLV, and that is actual allocated silver. The fund requires them to go into the market and buy 1,000 ounce silver bullion bars every time they have 1,000 ounces worth of investment dollar flow into their fund. And it's actually allocated. For every share of PSLV, there is genuine allocated silver purchased in the market, which is stored in places like the COMEX and the London Bullion Metals Association warehouses, okay? So if I were going to buy physical silver I could easily trade, and I have a position in PSLV, by the way, that's the one I would buy. Now, and so I hope that answers my subby's question. Now, there are many controversies about silver, like, is there a conspiracy by the big banks to keep the price down, or by governments? Maybe, maybe not is my answer. But people who invest in silver because they think there's a big conspiracy and it's going to explode higher once the conspiracy is unwound, I think that's the wrong reason to invest. I gave you my reasons already why I invest in it. Now, what are some other ETFs that you can, we'll talk more about silver in a little bit, because I also invest in senior mining producers, and I invest in a couple more ETFs that are silver related, which buy different companies that are miners. One is called SIL. That's like considered the senior mining producers. So when you buy this one, SIL, you're buying a whole bunch of mining companies all at once that are silver miners. And then junior mining companies, you can do the same thing in an ETF called the SILJ. This would be junior miners. That means they're smaller producers, but they may have better growth potential or better future profitability. In a strong up market, SILJ will go up more than SIL. They may have a pattern that looks something like this. If the SIL does that, the SILJ might do this. And the inverse is true in a down market. The junior miners will drop more than the senior miners because there's more risk, more reward. All right? So I own those two ETFs so that I can own a basket of producers. Why do I do that? Well, because if we take silver bullion, for example, silver. Let's draw a little silver bar here. Let's say we own a little silver bar, right? And we have an up market over the next 10 years. And silver goes like this. Over 10 years, it goes from $25 an ounce up to $50 an ounce or more, right? If silver was to do that, the silver miners, SIL and SILJ, would almost certainly increase much more than that. Instead of a double, instead of 100% gain, you might have a 200% gain in the SIL, or a 260% gain in the SILJ. So SIL might go like this in response, and SILJ might go like that. Actually, the curves would look more like this and like this. Okay? Let's say, let's do this right. This is silver. This is SIL. This is SILJ. The curves might look something like this. Okay? At their endpoints. Of course, in a down market, the same thing is true. Silver will drop less than the mining producers. Well, why do they go up so much more, the miners? Well, because they make so much more profit when the price goes up. In other words, if the producers, the miners in the SIL, are mining silver and it costs them $15 an ounce to mine it, and they're selling it for $25 an ounce in the market, they're making a profit of $10 per ounce, right? Now, if silver goes to $50 an ounce, what happens to their profit? It goes from $10 an ounce now to $35 an ounce profit. Now they're minting money like you wouldn't believe. Their profitability went up 350%, while the price of silver only went up 100%. Do you see why the miners would go up a lot more than the metal itself? And that's why I have spread my silver investment across bullion, a bullion ETF, senior miners, and junior miners. But in addition to that, as I will show you, I've hand-picked a whole bunch of companies that mine silver that I think will outperform all of this stuff. But again, they're more high risk than buying this or this or this. Okay? But it's a risk-reward equation. So I don't put all my money into those high-risk mining plays. I just put a little bit of my asset allocation into them. So if they make, say, 500%, great. At a time when this might make 100%, I'm satisfied. I want to limit my risk, maximize the potential reward. Some would say I'm taking too high a risk for my age. I don't think so. Because if you own dollars and you don't invest them, if you own a dollar bill with Ben Franklin on it, isn't that a great rendition of Ben Franklin? I think you could recognize him from a mile away. Okay, so here's a $100 bill. If I was to just stick this under my mattress, or put it in a money market fund, or even into a treasury bill, what will happen to this in time is this 10 or 20 years down the road is going to shrink and look like this as far as its buying power. Now, is that a conservative way to handle your money? No, it's a guaranteed loss. That's the unfortunate thing about today's investment world. It's completely different than it's been in the past. What was the conservative approach once upon a time is now a recipe for a certain loss in purchasing power. Again, because of monetary policy and government policy. They have to monetize the debt. You know, we just passed in the last year over $5 trillion in COVID and stimulus spending, and of that $5 trillion, about like $3 is going to be spent on actual COVID related stuff, and the other 4.99999 trillion is going to be wasted on, pet project. Okay, it's not that bad, but it is bad. I would say legitimately about 10% of this is actual COVID relief, okay? Like creating vaccines and administering them and testing and PPE and even the unemployment benefits. Awful lot of that's being wasted. There's a lot of businesses who can't get employees to come back to work because they're making more in unemployment than what they made when they were working. Is that a good way to promote a healthy economy? Not in the long run. It isn't, even if it gives us a little juice in the short run. Remember, if you take cocaine, it's going to take a bigger jolt every time to get the same effect. But anyway, I digress. Let's move on. Wow, this is going to be such a long video. What other ETFs could we buy for other sectors? Since we were talking about commodities. Well, in gold, you would buy an ETF. Let's put ETFs here for other sectors. In gold, you would buy one called the GLD, okay? In commodities, you could buy one called the DBA, also one the DBC. This one's agriculture, so they invest in wheat, corn, soybeans, etc., etc. The DBC is a broader index that includes things like oil and all kinds of other stuff. I expect both of these to slowly climb over time and be much higher in a few years than where they are now. So I have some allocation in each of those. I have some in gold that I don't intend to sell anytime soon. By the way, when silver hits, I have an exit strategy for all this too. I'm not going to hold it forever. If silver gets to 50, I'll cash out some of my profits in all of these things. And if it hits 60, I'll cash out some more. If it hits 80, I'll cash out some more, etc., etc. What other ETFs? How about solar energy, panel manufacturers? You can buy an ETF with the symbol TAN, T-A-N, and they invest in solar panel manufacturers, a whole bunch of them. So instead of trying to hand pick companies, you can lower your risk and lower your amount of study you have to do by just buying the ETF, TAN. That's solar. These were commodity ETFs. Commodity ETFs. What are some others? I have a pretty big investment allocation in uranium producers. I don't know if I have time to explain the reasons why to you, but I have some very, very good reasons why. If you're interested in exploring that sector, you would want to look up some videos on uranium on YouTube, and you would find immediately some good information as to why. But you can, instead of trying to pick the uranium producers you want to buy, you could buy an ETF that invests in a whole bunch of the best ones. That would be the symbol. Here we'll say uranium here. Uranium producers. That would be the symbol URA. And another good one is URNM. I also own some individual names in that sector. I own, we'll say this is uranium here. Uranium. I think my favorite is UUUU. And I also own a developing mine that will come online, NXE. It's a big deposit in Canada where they have a lot of uranium in the Athabasca region. I own one called ISO, which is kind of like NXE. I own UAE and Denison Mines, which is DNN. Sometime maybe I'll do a video and explain to you why this is a big thing in the future, why the supply-demand fundamentals are so compelling. But basically it boils down to we're running out of uranium. No one's been mining it in North America for some time. The mines are shut down because the price is too low on uranium, but because they're running out of the stockpile, the price will go up, and when it does, these producers will be very profitable. We use about 20% of the baseload energy in the US comes from nuclear power plants, and if we're going to go green and get off of fossil fuels, we cannot change that anytime soon. In fact, when it comes to green energy sources, nuclear provides more than 55% of the power generation, compared to wind, solar, hydropower, all combined. Okay, so we can't, and we're going to have double the energy need in the future that we have now in not too many years, since all the cars are going to go to electric. There's going to be battery storage, but we're going to have to generate way more electricity than we are now to fuel all those electric cars, just for example, not to mention all the infrastructure build out. So that gives you some overview of what I'm thinking and why. Well, let me go to some more specific stuff as to what I'm owning and why I think it's good or not good. I don't just own, these are all the uranium producers that I have positions in right now. Actually, I sold off a couple of these. Paladin went up too fast, and I wanted to take profits, so we'll cross Paladin off. Also, their mines are in Africa, and I think the political risk there is a little bit too high for my taste. And I also got out of baseload energy, but I told you some of the names I own and why. I won't belabor this because maybe I'll do a video in the future on uranium. In the energy and green and solar space, I like Canadian Solar. They have a real good profit margin. CSIQ is the symbol. I own Enbridge, which is an energy company that has an 8% dividend. I really like that. Okay, this isn't really green energy, but they're going in that direction. Right now it's a big oil, gas, infrastructure pipeline stock, but I like them because they pay 8% a year in dividends. So that's like getting a nice high interest rate on your investment. I like, Freeport McMoRan is a copper producer primarily. They also produce gold, so they're a big blue chip stock. If you look at their chart, you'll see that all of these guys have been climbing a lot over the last few months. I own Gigametals, which is a nickel and cobalt producer. important for batteries, which we're going to have to make millions and millions and millions of big battery packs for future electric vehicles and for storage. Like as they roll out solar panels for houses and so forth, those solar panels only work during sunlight hours, of course. So you want to store that energy in your garage at night with giant battery packs. So the battery metals are important in the future. Norilsk, nickel, NILSY. You get the idea. I told you about the solar ETF, TAN, and CSIQ Canadian Solar, but I also own some Sun Power, SPWR. I own them because they do a lot of things in the solar industry, including installation, manufacture, and installation of solar. I sold my PBW, that's wind energy, but I plan to buy some back in the future when it gets low enough. I think it will drop. I own some NEE, but you get the idea. I've got about 10% of my 401k in the energy green solar sector. What else have I invested in that I can tell you about? I have a little bit in shipping, EURN, because I see this as a good rebound play for the global economy after COVID goes away. I have some money in the Russell 2000. That's buying 2,000 stocks at once via an ETF, like I explained before, that has the ticker symbol IWM. You're buying the entire Russell 2000, and you can find an ETF for the Dow or the S&P, etc. I did own some emerging market India, but I have sold that for now. Got a little bit in PayPal as a financial, and have some in Jets. That's a recovery play. These are all small allocations. Jets is an ETF that buys the airlines, several airlines. I have some in Molson Coors, not because I'm so thinking about beer drinking, but Molson Coors makes tons of money, not only in bars, but in restaurants, and they have lots of products besides beer. It's all like the restaurant industry. I see that as a recovery play, so I have a little bit of that. I don't have the VIX right now. This is if I think the market's going to collapse at some point, or it's going into a bear market. This is a way to profit from that. It basically goes way up in a falling market. So I don't have it now because I don't see a bear coming soon. But I also own a lumber ETF because of construction, infrastructure. And as I told you, my thesis is that commodities are all going up. So this ETF is called, quite appropriately, wood. WOOD. I understand that some genders, well, never mind. Okay, look. March 2021. Forward. This is where I'm going to make notes in the future about what I want to do next with investments. Because the original intent of this video was to respond to my subby who asked about silver, I'm going to, and I'll also talk a little bit about gold I had an expert named Rick Rule, who's an expert in the mining sector. Just look up Rick Rule on YouTube and look for any recent videos, and you will learn a ton of stuff about the mining sector and how to invest intelligently. He's an expert in every way. Anyway, he rated several companies I'm invested in. He does this as a free service. And so I put his rating and then a whole bunch of other analysts. And I went and did research on every one of these individual companies to decide whether to invest in them and how much in each one. I'll show you on the computer screen when I get to that part kind of how I look at technical analysis relative to where to get into these companies and that kind of thing. But suffice it to say, I've got notes on all of them that I took, highly summarized notes on why I'm getting into that place so I don't forget later. But you can buy the Gold Miners ETF, which is GDX, for example, or the Junior Gold Miners, which is GDXJ. But I own a bunch of individuals like Aftermath Silver is a risky play, symbol AAGFF. They're in Chile and Peru. But if silver goes up a lot, these guys will go up faster than other miners, and but they're more risky. So I only put a very small allocation into a company like that. Agnico Eagle, on the other hand, AEM, is a very, very well-run, highly profitable gold producer that has been beaten down far too low in price compared to their future earnings prospects. So they're a real conservative play. So I have some money into them. First Majestic is one of my favorite silver companies, AG. They have the chemical symbol for silver as their ticker, AG. Arcana is a company in Colorado I'll discuss a little bit on the rest of the video. Discovery Metals has close to 1 billion ounces in the ground of silver, and I think they're undervalued at their current price, even though they have soared in price over the last year or so. I believe they're still undervalued. Their asset is worth far more than the current market cap of 600 million. Think about 1 billion ounces of silver. If it's, say, $50 a share, right? That's a $50 billion asset that they have if silver goes to $50. And yet they're only priced by the market at 1/2 of 1 billion roughly right now. So that's why I like them as a long term. They don't have a mine yet. They're developing the mine. And those are some of the most profitable but higher risk plays that you can get into. So I have a pretty good size allocation. That's my favorite developer as far as future silver mining. I have a whole bunch of others. I won't read every one of them. Some of these are senior producers like Hecla HL, soon to be very profitable. And then I have some gold explorer developers who are close to building their mine or already building their mine. If you get a developer who's actually building a mine and the numbers make sense, then that can be one of the most profitable mining plays you can be in. But of course, if something goes wrong, they can lose a lot. So again, I put very small allocations into these kinds of plays. Pure Gold Mining LRTNF is their ticker. They've got a real good asset, Red Lake area, very high grade, all-in sustaining cost projected to be about $800 an ounce to produce gold. Well, think if gold is $1,700 an ounce and they're producing it for $800, they're making, a lot of money on every ounce, right? Like $1,000 or more. Internal rate of return 51%, that's very high. They may get bought out by a bigger gold mining company at a higher price than they're currently at. MAG Silver, MAG, they're in Mexico, as most are. Most silver is mined in Mexico. They're considered a superb company. So I own, a bunch of different ones, and then I have the ETFs, like SIL. As I explained to you in the beginning part of the video, SIL owns several companies, and I'll show you that when we look at the computer screen. And I look for good entry points based on technical analysis, which I don't want to go into too much right now, but suffice it to say, if you're looking for a good entry point, pick a point where a stock retreats to a previous support level, and I'll talk about that a little on the computer screen. I can draw you a little graphic of it real quick to try to explain it. Let's see, what's on the other side of this paper? Yeah, you can't see any of it now because of my drawings. But technical analysis works like this. Let's say we're looking to get into the SILJ, and we don't know where our entry point should be, yeah? And let's say let's say the price is looking something like this, 10, 20, 30. I'm just using these as an example. I don't know what the current price. We'll look on the computer and see what it is, but if the price action looks something like this, for example, there are a lot of ways you can look at this graph and figure out what you should do as far as an entry point to get into that particular position. You can look at previous support levels. For example, we can see a pretty good support level right here. Every time it comes down here, it seems to bounce off that level. So if the share price was here right now and I saw it and I wanted to get into this position, I might put a buy order in. If the 30's right there, I might put a buy order in it at say 30 and hope it comes down. I get my order filled and then it starts going up again. Or I might look at an uptrend line and try to draw an uptrend line on all the points it hit along here. And that might give me an entry price of 32 instead of 30. Because I want to hit that uptrend line, because I expect this pattern to continue in some way. No one knows for sure what will happen, of course. The reason you pick these things is because thousands of other people are using these exit and entry points, including hedge funds, computer algorithms, etc. That's why it can be a predictor of support, not out of some mysterious black magic that forces the curve to do things. It has to do with tracking investment behavior by others, by funds, money managers, computer algorithms, etc. But what I might want to do if I'm conservative is put a small order here and a small order here. 2 lines of support, right? Well, suppose the 50-day moving average is looking something like this, and it intersects with one of these. That's an even better indication of support. What if the 200-day moving average is coming through here, and it's down here? That's another thing that would tell you there's support there. Those are the 2 most commonly used. 20-day moving average, 50-day moving average, 200-day moving average. So I use a combination of things like that to figure out where to enter a position. It can be used also to tell you when to exit a position. Like if this company was to break well below support, all that support, you could anticipate that it's not going to stop there. It's probably going to go down to a lower level of support, like maybe these 3 bottoms here. So you might sell your position here and hope to get in back in down here. Maybe you would do that with a percentage of your position, not the whole position. So that's the kind of thing you do with, technical support when choosing entry and exit points. Naturally, it doesn't always work. You want about a 60% probability of it working. That's good enough than just ignoring everything and buying or selling, right? So, with all that said, I think I've given you an overview that's very lengthy. Let's go look at the computer a little bit, and I'll probably repeat what I said, some of what I've said, but maybe by now you're asleep. Or if you don't like the computer screen section, the monitor section, you can tune me out. But whether you do either one, please give me a thumbs up on this video. Thanks a lot, everyone. Tell me what you think in the comments below, and don't ASMR and drive. Alright, so here are my chicken scratchings on notes that I take on the companies that I own currently, or the investments I own in the gold and silver sector. You can see that just in this sector I have quite a few, probably way too many. I'm only going to discuss a handful of these, like I'll discuss the silver, the SIL here, let's see, the SIL and the SIL-J, maybe Fortuna Silver Mines up here, and things like that. The kind of notes I'm taking on these investments is, what's a good entry point? How highly rated are they by the analysts who are experts in this field, etc., etc. I track whether they're going to have a whole bunch of shares diluted or becoming unlocked, and on what date, so I can get out before that and get back in if there's a drop. I make notes on, I'm investing across a wide spectrum. Let me show you. I don't have my own specific list up here, but I'll look at a few. Here's how you would want to invest in the silver market if you wanted to get into it. Many people and each person would have a different strategy depending on their age and what their goals and objectives are. If you think the end of the world is coming, for example, and that the dollar will completely collapse and the economy will collapse, then you might want to have some silver coins and silver bullion, because those would retain value no matter what happens to a currency or an economy. that silver could be traded for things like fuel and food. I am not one of those preppers who gets quite that wacky about it, but I do have some silver bullion. You saw that in my other video. But I don't keep a lot of my investment that way. Mostly I do it in the 401k plan. And here is how I do it. First of all, let's talk about just silver bullion itself. Oh, where do I think silver will go and why? Let's pull up silver bullion for a second. We can do that by a proxy, an ETF called SLV, Silver Trust. The Silver Trust is a proxy for silver because they invest directly. They're not a miner. They put the money into silver bullion specifically. So it's a quick way to buy and sell without paying a premium for coins or having to store it or etc., etc. Now, some people don't trust the SLV because they think that the SLV doesn't really have all the silver that they say they do. So if, say, people have put 400 million into the SLV, what is their current market cap? 16 something billion, right? So they are saying they have several 100 million ounces, and people say they don't really have that silver because their prospectus is worded in such a way that they might be able to do part of it with futures or derivatives. If you don't trust them and you want to buy physical silver like a stock, I recommend the PSLV, which is the Sprott Physical Silver Trust. They have an ironclad prospectus that requires them to buy bullion allocated. It's called allocated silver. In other words, when you buy into this, you get allocated to you physical silver that actually exists, which you can even claim if you want to. Now let's see how silver's been doing lately, and then we'll talk about why it might be a good investment. As you can see, if we look across 1 month, it's been doing very poorly. It dropped a lot, from up here down to here. If we look across 6 months, it's been very choppy, up and down, as you can see. If we look across a full year, you can see it's in an uptrend, starting down here last March and going to here. So this isn't the price per ounce of silver. This is just a share price. But we can look at the actual chart for PSLV, and we can see how they're doing long term. And as you can see, if you go back a whole year, this ETF was way down here, around $4 a share. Climbed all the way up to about $11 a share late last summer. Then it dropped a lot, climbed almost back up to where it was, and now it's down here, somewhere in here. There's interesting things to look at on a chart if you want to decide a good entry point for silver. You can see there's pretty good support along this level. See how it came down and bounced up, came down and bounced up. There's also some support along the short-term 50-day moving average. If I wanted to enter the silver market for the first time, I might put just a little bit of money into it now because I expect it to go up a lot, but I might save some on the side in case it was to retrace back down to this support level, I might put in an order at $8 a share, something like that, which would correspond to about $24 an ounce in silver price. So that's one way to own silver that's, I think, quite safe if you want to capitalize on the price of silver. And you would have gotten a double over a year's time, basically, roughly, about 100% gain. Let's see who's texting me on my silent. Make sure it's nothing super important. Nope. Okay. Now, so I have some of my investment in PSLV, but I also want to leverage my money. I'd like to make a bigger gain than just the gain in the price of silver. Silver right now is around $25 an ounce. You can look up the actual price anytime by looking up the Kitco website. That might be the best one for precious metals. So let's take a peek at the Kitco website and see where silver is right now at this very moment over in Asia. As you can see it the market is closed in New York. It went up 3% today to $26. But over in Asia it's dropping a little bit. The market is open there. It's a green light there, see? Can you see the green light? And it's down about 0.5% roughly. Still close to $26. Kitco.com is a good site for gold and silver, because if you go to their homepage, they'll have lots of stories and videos you can watch. Here's one on nuclear power I was telling you about. And you might want to check into that if you're interested. Another gold price, and they have opinions all across the board. One guy says the commodities super cycle's coming. One says gold has bottomed and it's going to go way up. One says gold's going to drop more in the future. They each give their rationale. So it gives you a broad perspective of opinions. And then this guy's a good interviewer here. And he talks to a lot of different experts. Lots of videos on this website. But anyway, as I was saying, if we look at silver's quote again, little quotes here, where do I think it will go from here, or where do many experts think it will go? Many experts think silver's headed for $40 or $50 an ounce, or possibly even much higher. And the reasons, and over a period of, say, the next 2 to 3 years. Some say even by the end of this year, but I don't want to get my hopes too high on it. Why do they say that? Well, mining production has been dropping the last 2 or 3 years as demand has been very strong, especially investment demand. Silver demand overall has been running about 1 billion ounces a year between various different sectors. It's like 100-something million ounces for solar panels and 300 million ounces for various types of jewelry and fabrication, silverware, artifacts, etc. Maybe 200 to 300 million ounces for electronics, etc., etc. The investment demand for silver jumped a lot this last year, especially the last few months and last few weeks, because of certain government policy changes. And I expect that demand to grow in the future. There was even a run on silver by the Reddit crowd for a short time. But anyway, as a monetary metal, it's probably going to rise in response to inflation and the drop in the value of the dollar, the increase in debt. But there's also an increase in industrial and investment demand should drive it higher. It's getting harder and harder to mine silver. The easy stuff, the low-hanging fruit, has been picked off the tree already. Large silver deposits are hard to find, and the explorers have to go deeper and deeper into the ground to find it, for the most part. So if silver was to go to, say, $50 an ounce, say it was a double over the next 2 or 3 years, what would you expect to happen to the mining shares? Well, what you would expect is they would be far, far higher than a double, because their profitability goes up more than double. If they mine the stuff profitably and it costs them $16 an ounce to mine it, and they make, say, $8 an ounce in profit, imagine what happens at $50. The $8 an ounce becomes $30-something an ounce. They're making a 400% gain in their profit, since the mining cost did not go up, but what they're producing went up a lot. That gives them huge potential for gain. Let's take a look at how that works in practice. Using this, the PSLV, well, let's use the SLV because it's a little closer to the silver price as far as its share price value. We'll use the SLV for example. Let's compare the SLV, which is this blue line, this purple. These two lines here are moving averages. All right, this is the 200-day moving average. This is the 50-day moving average. But this jagged blue line is the silver price proxy using SLV over 1 year's time. Let's just do it over 6 months' time there. Now let's compare that to a typical solid silver miner. Let's say Fortuna Silver Mines, one of my favorites. And we'll make Fortuna Silver Mine a green line. As you can see, when silver goes up, like here, Fortuna Silver Mines goes up way more. When silver drops, of course, then the price of the shares drop. When silver went up here by just a few percent, Fortuna Silver Mines went up 40%, okay? So it gives you leverage to the silver price. That doesn't mean I'm telling you to run out and buy mining shares. Remember what I said. Everyone's responsible for their own decisions. Well, you may look at this and say, this doesn't look very impressive because tech shares went up a lot over the last year, and they doubled in many cases or more. And so, what makes this any better than buying tech shares? But let's move the curve out a little further, our time window. Let's look across 2 years, okay? Look what's happened to silver over 2 years. It was down here, or the Fortuna Silver Mines and silver. If we take this as the baseline, silver's gone up about 67%, Fortuna Silver Mines about 85%. But at one point, Fortuna was way up here at like 150%, okay? Now, if you were to take a junior, Fortuna is like a senior silver miner, a producer. But what about someone developing a big deposit in that's going to become a mine? An explorer developer. They give you even more leverage, but they also give you more risk. And as an example, let's take a look at Discovery Silver. I think it's DSVMF. Discovery Silver. Oh, I'm sorry. It's not going to let us look that one up because there's a chart problem with that one. So we're going to start over. But I'm just going to suffice it to say to you, we'll skip Discovery because the chart's messed up. Suffice it to say, though, they went up about 500% in anticipation of silver going up. There's a projected increase in silver industrial demand because of solar panels, which is going to be a huge thing in the future. So, of course, I'm also invested in certain solar panel companies. We'll pull a couple of them up, like Canadian Solar, CSIQ. I like this one because they're very profitable. They have a price-earnings ratio of 13, which is a good number, and that will improve. Another one, they're an actual panel manufacturer, but another good one is like SunPower. They install panels. SunPower was up 11% today because they were dropping quite a bit over the last few weeks. But nonetheless, if you look at their long-term chart, this could be a very good time to buy them because they had a huge increase after the election in anticipation of a big demand for solar panels in the future as we shift away from oil and gas. Meaning, of course, your the cost of your gas is going to go up and already has, but if we go to all electric vehicles, for example, it's projected we're going to double the electricity demand in the United States over the next few years. Where's all that electricity going to come from? We're going to need a lot of nuclear, a lot of solar, and of course, we're going to have to build a lot more conventional power plants. But you can see what happened with SunPower. In just 3 months' time, it went from way down here to about a 1,200% increase, okay? Imagine if you were invested in that one a few months ago. So where, if you wanted to invest, would you buy it? When something goes straight up, it's usually going to come straight down after that, after the hype wears off and the momentum stops. When the music stops and you don't have a chair. So I use technical analysis in order to pick an entry point or pick a place where I want to put more money into a stock. I'll give you a good, solid example with Fortuna Silver Mines, which I'm hoping will give me a 200 to 300% increase over the next few years. FSM Fortuna Silver Mines. They were up 5.5% today. If we look at a 1-year chart, we notice some interesting things. I bought some Fortuna today for a very specific reason. I see solid growth and earnings growth ahead in the fundamental side, and I've already told you I expect silver to go way up, which will make them highly profitable compared to current. But I also use some technical analysis as an entry point. Look how Fortuna, every time they got down to this level, they bounced off it. 1, 2, 3, 4, 5, 6, roughly 7 times, roughly at this level, okay? They bounced off it. But furthermore, okay, we have a solid 200-day moving average intersecting that support level right here. You put those two together along with an expected increase in the price in the future, and this becomes a pretty good entry point right there. Let's look at it in summary form instead of percentage form, and you can see that we're talking about a price that has bounced roughly off several times off about the $6.50 level. So this is a good entry point. I bought some today and I bought some yesterday as well. I own some others, like some of my favorites. You can see here on my list I own some of these. I own Alexco AXU. I own MAG Silver. This is one of the best up-and-coming silver producers. Most of it comes from Mexico. That's where most silver is produced these days. First Majestic's very good. I own some of them. Silver Crest popped 7% today. I own some of them. But I don't advocate someone to buy a bunch of companies they don't know anything about. So you would want to do a lot of research on these companies. You can watch YouTube videos about the specific companies, and you can check them out on Yahoo and a lot of other places. But what if you wanted to invest in the silver producers, but you didn't want to have such a high level of risk, and you didn't want to try to hand pick the companies? What would you do then? Well, you could buy an ETF fund, and I own 2 of those, and they invest in a bunch of silver producers so that you own all of them at once just by buying this one ticker symbol. For example, SIL, SIL. It's called the Global X Silver Miners ETF. And they will go up and down in value with less volatility, less extreme moves than the individual companies do. So it's a more conservative way to leverage the price of silver, but still make more than you would make by just owning the bullion. Well, what companies do they have in their portfolio? We can scroll down and see their top holdings. They show right here, and the percentage in each one. Wheaton Precious Metals they hold. That's a streaming company that makes money off gold and silver production. They've purchased in advance production from mines, and they get to sell it at a profit. They purchase at a low price, long-term contracts, and then sell at a higher price. Pan American Silver Company, they own 12% of that. Polymetal, First Majestic, Hecla, I own some Hecla. I don't own Polymetal. Anyway, you can see how it breaks down here. Core Mining. That's a way to buy a basket of companies in the silver mining production sector. I also own some explorers and explorer developers. They go up a lot more in a rising silver price than the big producers do, but they're more risky. So I only have a small portion of my silver investment allocation in them. I own, for example, Kootenay Silver, KOO. Where'd my cursor go? There it is. KOOYF. And it went up about 6% today, okay? And you can see it's been very choppy. All of these junior mining and explore developers. Some of them went up 2, 3, 400% in the first half of 2020, and they've been kind of going sideways or dropping since then. So I use a variety of things like technical analysis to decide whether to buy any more with the cash I've set aside in the investment portfolio. Impact Silver is another one. Silver One Resources is another one. And you can scroll down in Yahoo and read the basics of what they're about, but you can also click on their website and go read their prospectus, read about why they believe they're going to be highly successful, say with Silver One, for example. You can go to their website, it will tell you all about what they're doing. Nevada's highest grade silver mine site tour. And they give you a tour of their Candelaria silver mine. Silver One's one of my favorites because such a safe jurisdiction, Nevada. I don't like buying mining companies that are in Guyana or, some Peru or something like that, because you don't know when the government of those countries is going to intervene and, nationalize the mine or something. That kind of thing can happen, and you don't want that. Another one I own a lot of right now is Arcana in Colorado. They're developing an excellent mine. What's their symbol? AUNNF. And AUNFF, I think it is. There it is, Arcana. They're in the process of finalizing their development of their mine. It's a nice big mine. I think it will be very successful. On Yahoo you can read all of the articles about them. Their Revenue Virginius mine is their big asset, and that's in Colorado. Like, here's an update on how they're doing as of February 17th. Construction update, blah, blah, and they discuss all of that. You could go to their website also and read all about their mine. And on YouTube, there's a tour of their mine also. It's quite interesting. You could look that up if you were interested. So I think this gives you an idea. I mean, it would take me a long time to go through all the names on this list and tell you what I'm invested in and why, but you can see it's a long list. And I have a rationale for every one of them. But as Rick Rule says, by the way, if you want to get some expertise on things like silver, gold, and uranium mining companies, look up videos by Rick Rule, Rickrule. That would be a good starting point, because he's got a good macro overview. He's a multimillionaire has been a CEO of one of the Sprott investment group. Eric Sprott is very well known in the mining industry. They have the biggest, probably, investment in mining of any consortium out there. But yeah, so Rick Rule. But anyway, the same kind of things can be applied to other commodities. So if we get off the silver subject for a moment, other places, since I'm expecting all commodities to do well in the future, and they already are because of this monetary policy we have now. Let's look up, for example, the DBA. This is an agriculture fund that invests in futures of corn, soybeans, sugar, coffee, cocoa, cattle, etc. All right? If you look at how this fund is doing over the last 6 months in particular, you can see it was kind of flat and then started really taking off. So it was down here at 14 something, now it's up to 17 something. I expect it to just keep increasing overall for years to come. And you can see that it was nothing but down. If you look at, now we're looking at 5-year, right? Because this is how commodities behave. They drop for like a decade. They go down and down and down. And then for a decade, they go up and up and up. So it's called the commodity supercycle. Let's pull up the 5-year chart. You can see how much they dropped over 5 years. That would be a nice entry point down there, right? So if you got in down here low, you'd be about 150% ahead now. So I have some of the DBA because I'm not going to try to invest. I'm not going to go buy some cows, okay, or some wheat bushels and then try to resell them. So this is a way to do that. Profit from the futures price increases that are going to probably take place over the next few years. Another one that I'm in is the DBC, Invesco Commodity Index. This one includes energy and such. And let's see how it's doing over 1 year. You can see from down here, say a 19%, initial 21% loss someplace back there. It's gone up. It's more conservative than buying some other things. But I think if inflation is coming, and I believe it is, that's a good place to be. Now I talked to you a little bit about uranium. Let me just show you the kind of thing that happens in the world of uranium stocks. Even though the price of uranium itself is very low, nobody's operating mines or building mines yet, or on a very small scale. But the industry's starting to figure out that there's a big uranium mining boom coming. So look what's happened to uranium shares. Let's pick, for example, UUUU, which is one of the companies I own, Energy Fuels. Look what's happened to it. Let's look at the summary. It's easier to tell the price appreciation. If we look over 1 year, you see how it was flat. The shares were like $1.50, and now they're triple, more than triple that. 300% gain here at 513. And this isn't going to just stop here. There may be a big retracement at some point. It may drop back down quite a bit. You know, there's no guarantee it won't. It may end up down here someplace. For me, that would be a buy opportunity because I expect it to be way up here 3 or 4 years from now. And others in the space are the same way. I own every one of these names down here. UEC, URG, Denison Mines, DNN. Next Gen Energy, which is going to be the next big uranium mine up in Canada. Cameco, which is a big producing mine already in place, but with their current mining operations shut down, waiting right now. And they're like the second biggest producer in the world. They're waiting for higher prices. But look what's happened to, say, Denison, for example. If we look over a 1 year time frame, they went from 21 cents a share to up to $1. It's a 400% increase in 1 year, folks. You couldn't get that in the tech shares. not a 400% increase. How about UEC, Uranium Energy Corp? A year ago, they were 51 cents. Now they're over $2. Okay, that's a 300% increase. And that's after a pullback from this peak, right? There was a big peak in mid-February, and a lot of these names have pulled back. I actually sold some. I got stopped out of some positions in uranium. And like about halfway down this peak, I have stop loss orders in place to make sure I lock in profits, which means if a stock starts to go down, there's an automatic sell that's triggered in my account so that I don't lose a lot. Now I'm looking to buy more in the sector again. So I'm slowly starting to phase back in. I still have a good sized position. About 12% of my portfolio is uranium shares, but I want to increase that to about 16 or 17%. And so next gen is another one. Look where they were, 59 cents. They went from that to now $3, almost $3.50. So you see there you're talking about a 500% increase, roughly speaking. And they were even higher, you know. It was like 700 or 800% just a few weeks ago. So I'm looking to get back in. And I have buy orders already in place down at the what I consider a reasonably good support level. If I look at the chart, I think of a good support level as probably being in through here, although the 50-day moving average is not a bad spot either. But yeah, so why is this giving me percent instead of price? I'm gonna have to check on that. But yeah, so I can fix that. But yeah, on all these companies, you can do your research on a site like Yahoo or investor.com. There's all kinds of good sites that you can use to pick these, and maybe I'll try to put a few links in the description of YouTube channels you can go to and website you can go to do some research if you're interested. I have a guy I follow, for example, who's kind of a millennial and seems to be good at picking up and coming trend stocks. And I've made some money chasing certain trends this year. There's too much of that going on, so it's indicative of a market top, but there's a lot of momentum money chasing around from sector to sector, you know. A lot of it went into the marijuana sector for a while. I don't buy into that sector because I don't really want to profit from people doping themselves into oblivion, but that's just me, you know. Maybe you don't have qualms. And then you can buy the ETF called MJ, you know, Mary Jane, and that's up 6% today, for example. But it's just not for me, that's all. They've made pretty big gains this year, but they peaked back here. See, they were way up there, 33. It's already dropped within a few weeks down to 22. Some would say this is a good buy point now because the long-term trend, that's about a good support point there. If you were to do an uptrend line across here, across this 6-month trend, we're right about at a good buy point, yeah. So, but I'm not going to buy it, even though I'm tempted. I'll let someone else make gains from the dopers, right? It'd be kind of like in the early days of cigarette stocks, you know? Would you really want to buy, any of those big companies knowing it's going to kill millions of people? I wouldn't want to. So there are lots of ways you can make profits in the market. Let's take a look at Apple today and see how it's doing. Just for fun, I own a little bit of Apple in my tech allocation. It's up 4% today, but it had a big pullback. See, it was up here at 143, and now it's all the way down at 121. So it's lost quite a bit in the last few weeks. But that doesn't make it a bad play now. If you like Apple and you like their prospects and their product, their growth and their profitability, then now is the time you would get into the company, unless you think the whole market is going to collapse, right? Because it's on sale. You want to buy a good stock when it's on sale, not at the peak. So when it was going up too fast from here to here, then that's not the point in time to buy it. That's the point in time to say, maybe I'll take some profit off the table and then try to get back in with some of that profit later on at a lower level. Yeah. Let's see what the 1-year chart looks like. See, they look pretty solid. And, last March was the ultimate fire sale for stocks, right? So Apple has pretty much doubled from where it was a year ago, when the whole market went into a total free fall collapse. The smart money was buying then, not selling. But the small investors were selling because they panicked. And that's how they lose money. So yeah, I bought Apple right around here. It was like 90 something. So I'm holding on to a Apple position, but I don't have a huge amount into it. I just consider it a nice long-term growth tech consumer product conservative position to hold that over a decade will go up. So yeah, I hope this ramble was a little bit informative. I could have said a lot more, but this is an awfully long video by now, so I'm just giving you some idea of my approach to the next 10 years, of which I might only live 1 or 2 of them, right? So it's not super important, but yeah, I'm just hoping to grow the account and be able to do some travel and things without feeling like I've cut my kids out of their inheritance and so forth. I'd like to leave them something. I even want to use some I want to give some money away and do a mission trip, things like that. So, not trying to get rich off this. It's more like a hobby. And so I look at the market each day in the morning for an hour or so, and then, go on to other things. Take care, everyone. I hope this put you to sleep. But if it didn't, I hope it had some value to you. Don't invest on what I say. Do your own research. Everyone has a different circumstance. The one investment advice I'll give you is put the maximum amount you can into a 401k and save it if you have access to one, because that's going to really help you as you get older. Take care, everyone. Bye-bye.